The following is a presentation of TFNN. The Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tommy O'Brien, and Darrell Martin.
Welcome, folks. We have the Dow Industrials right now down 32. You get the Nasdaq off 11. S&Ps are down 5.5. And folks, if you haven't test drove the Nadex platform yet, come over to our website at TFNN. You're going to see the banner on the very top, on the side. You can pull that banner up. You can get.
So the market's moving so quick today. You're having some computer.
Yeah, slightly, just a little. Morning, Tom. How you doing, man?
Good morning, man. How's it going?
So yeah, I got another one up right now.
That's all right. It'll take a couple minutes. That's the beauty of starting a live show.
That's right, and having plenty of computers.
That's right. That's right.
So we get the Fed minutes. We get the Fed meeting on Wednesday.
Yes. Are they meeting? I believe they're Tuesday and Wednesday.
Is it a 2-day? I'm not sure.
I'm not positive, but I think it may be.
Okay, cool. So, the bottom line, folks, is that more than likely, I suspect it's going to be status quo, because we have a world right now that is in negative interest rates in quite a large way. So it's like if the Fed decides to go up, it's going to be a jolt to the marketplace. I expect at some point they're going to have to go up, but, right now I just don't see it, man.
And there's so many dynamics, too. It's just interesting.
There are, man. It's like pretty amazing, actually. The markets themselves, when I was just doing that update, so that statistic, folks, okay, that's quite a statistic if you heard that update. With the statistic for the last quarter is that more money was taking out of the market, meaning, something that they can gauge, meaning the mutual fund money, than in 2007.
I read that.
Yeah.
You sent me the article this morning.
Right.
Which was great. I definitely read it. It was, and I was sending it actually to some of my friends because it's interesting for sure.
Isn't it? I mean, it's pretty intense, because, it's always about supply and demand. And so what you have is that the supply side of it, basically is coming out. Well, the demand side is coming out, and the demand side that is basically what the article's about, that's keeping the market up, are the stock buybacks. And bottom line, folks, stock buybacks have everything to do with keeping the stock up so the executives can get out of their positions, and then once they're out of the positions, forget it. It doesn't matter at that point. Then it just goes south. So
yeah, it's definitely something to be aware of. No matter how much meaning you give to it, it's a startling statistic.
Isn't it?
Yeah.
It really is, man. It's pretty amazing. So let's find. I gotta acclimate myself to this for a second. 1 second. Let me chart, trade.
So what are you trading this morning so far? Anything?
I'm short bonds still.
Okay.
You got the 10-year up 5 ticks. The 30 is up 13. They still want lower price. The TLTs that confirmed ABC down. You know what is shocking, folks, okay, is that the S&Ps that confirmed ABC structure on the way up. That in itself is I was expecting that, we're going to get up there, but there's one thing getting up there, is another thing being a confirmed ABC up. Friday, took the B point out, took it out with volume. It's like, okay, man, you get game on here. It's like, really? It's like, wow. So that in itself, I expect is going to be a jolt, and that should get everyone bullish. They'll be up at the highs, and that is just that's how markets like to move, I guess.
Yeah, it'll be interesting with the Fed too. It's like we can talk. I know we have a break coming up in like 2 minutes. We can get into it more, maybe even after the break, and look at some of them. But this is a week sometimes where in prior weeks, just like you did with a weekly binary.
Yes.
you could do something small if you wanted to take a position that, maybe you'd trade it just until Wednesday if it moved to, with you or against you.
Yeah, that's a great point. Yeah, we'll pull that up. No, I'm with you. Right.
There's a lot you can do regardless of, on many different kind of options, Nadex being one of them, with that type of news event coming midweek.
There's no doubt. And, we are going to have volatility, folks, okay?
Right.
You know what's so wild? So, Tom, when you think about it, is that we know that when Europe came out with they went negative more, volatility was big time. And it seems that everyone knows what the Fed should do, which is nothing. So when I talk like that, well, nothing should happen. But we know that that's not going to be the case.
Right.
Well, we don't know anything.
Right.
I'm just saying that that's too easy, too. That doesn't make any sense. Do you know what I mean?
Right. It can't be like that because we don't know everything, right?
Yeah. And what are the real implications? This is the kicker, folks. What are the real implications for negative interest rates? That's what's moving gold.
Right. And that's what that's why there's so much volatility too, because whatever they do, the market isn't even sure what that exactly means, no matter what they do.
Yeah, that's a good point.
If they raise them, everyone's not sure what that exactly would do, right?
Yeah. No, there's no doubt, man. There's no doubt.
Yeah.
You stay right there, folks. Tommy and I are coming right back. We have the Dow Industrials right now down 25, Nasdaq's off 10, S&Ps are off 5.5. You have gold down 11, silver's down 3 cents. We're going to be right back, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionics, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Tommy O'Brien. We do appreciate you growling and prowling with us out here. Right now, we have the Dow down 24, Nasdaq is down 8, S&Ps are off 5.5. And we're going to go over to the S&Ps because what we do have, Tom, I have the E-minis up here, right?
Okay, perfect.
So the SPYs had taken their B point out, taken it out with volume. The E-minis also had the volume. So if we go over, and this looks pretty cool, man. This is blowing my mind, actually. So it is. So I'm going to bring up, folks, and you can walk through this with us, okay?
Yeah, I'm watching you. I got you, too. So we're good.
I'm going to bring up the binaries, and
just to say it too, like I have the Nadex platform up in front of me. People can download the demo, right? And then you can follow along when we do this stuff, and that's a great way to learn to get introduced to it too.
It is. No, absolutely.
That's what I'm doing right here. I have the platform up, of course, you know, and I'm watching your screen, but I'm looking at it on my end on the same.
And that's what you want to do, folks. You can really understand this. So I'm going to go into the weeklies. So I have the SPY and an ABC structure on the way up. Gets to 209. When we go into these weeks,
where's 2090 in the? You said 209.
Yeah, 209 on the SPY. So let me
2090, right? No.
Yeah, that'd be right. That'd be approximately. I'd have to do the exact thing, but let's see. 1877. Oh yeah, it's huge, man. 1877 up to 1995. 77, 87, 97. That's almost 120 points. Gets you. Oh, is that right? Yeah, it's even bigger in the SPY. I mean, in the futures. It's 100.
Okay.
Yeah. So here. So if we bring it over, the cool thing is, watch this, Tom, which is blowing my mind. That's what's really blowing my mind. Now, if I get this right, the Friday afternoon, a close over 2056. That would cost me $7.
You got it. I'm looking at the same market.
Okay, so this is what the trade is, folks. I'm saying that will close over 2056 by Friday afternoon. That's going to cost me $7 a contract.
Yeah, 2056.50 to be exact.
Right.
But yeah.
So if you do one, you're betting $7.25 to make.
You're risking it. Yep.
You're risking to make 92. So
to make 93, 7 to make 93.
Right.
Yeah.
So bottom line is I'm gonna. Oh, that's even better. I just went to 675. So there we go. I'm just buying 10 of them right now. Okay. So I just bought 10. So what happens is this. So I have into. Go ahead.
Yeah. No, I just said nice. That's yeah.
Yeah. It's.
I mean, I can see it load up in your open positions. You know, you have, and that's where you can see. And I'm constantly checking it when I'm making trades. You know, it says until expiration 4 days.
Right.
There. You know, so.
Now you know in that case, man, I gotta buy 10 more because. Well, what happens, folks? $67 to make 932. You know, in the course of the day, that's. So I get 20. I get 10 So right now,
you know, it's a directional play, and you know you need to be right on your call more often than the market is anticipating. But you know, for the volatility we've been having, you're about 52 points away from where that is in the market, which is about 2.5%. And you know, if anyone's been following the market, what are we getting? 2% moves on a daily basis sometimes, let alone a week. So for sure.
Right, and I have the ABC structure up on a confirmed basis. Now, it doesn't mean you get it, folks, okay? But your probability is pretty good when you take a B point out with volume, you know, that you're going to move forward, never mind just getting a full price projection, where the probability comes down, you know, by a good 20, 30%, is do you get the full price projection versus just moving forward, you know? So, and we get the Fed simultaneously.
Yes, definitely.
You know? So right now on that, I've actually I think, let's see. So my average price is $663. So that's pretty amazing, man.
Yeah, and you can always trade that position. If it gets close, if it gets within 5 points or something like that within 2 days, maybe you just get out at 40, right? Instead of, I'm just, that's.
No, absolutely, man. Well, here, you know what's so crazy? So, folks, this is what gets really crazy. When I trade options, I like to do this quite a bit, actually. What really gets crazy here is that the movement in the market has to go a little. And if this goes into $12 or $13, I just get my principal back and just let the thing ride. That's what gets really bizarre. Do you know what I mean?
Yes, definitely.
When they're that...
Right, when it's that small of a risk.
When it's that small. Do you know what I mean? And
yeah.
And now what that does is that does skew the aspect of, how you break down, like, what the real percentage is. Because when I do that, then it's like, okay, hold it, man, because you're getting your principal back.
No, yeah, you have it exactly, where it all plays into whether you're trading profitably or not, right? But it skews where if you're just making the decision at the beginning of the trade, whether if you're going to hold it till expiration,
right,
then that's going to change things, right?
Right.
But
that's a pretty good bet. It's at what, $126 to make $2,000.
Well, just keep it on a per contract basis, and it's so simple. It's $6 to make 93, $6 to $7 to make 93 to 94.
Right. I can wrap my head around that.
Yeah, so even if you're holding it until expiration, you'll have to be like 1 out of 15 times, and you're trading volatility because you think there's going to be more volatility than market anticipates, and you're just making that play to the upside.
Yes.
But you definitely are going to capitalize if there's huge volatility in the market one way or the other. Well, by sheer just randomness, if it happens, you're going to be on that side 50% of it, and you only need to be right 1 out of like 15 times making that trade. So if there's huge volatility, you've anticipated one part of that trade correctly, Yeah,
and so realistically too, folks, what I'd like to see is I need this volatility to come in the next few days, which it should because of the Fed itself.
Yeah.
Because this thing will die on the vine. There probably won't even be a bid by Wednesday after the Fed because this is so far out of the money, right? That we get close, right?
It would be close, probably. Yeah, you're right.
Yeah.
I mean,
but guess what?
There has to be a lot of premium, and even if it's just at 6 or 7, right? There has to be a lot of premium priced in for like the next 3 days leading up to the Fed.
Yeah,
right.
Yeah, it's pretty wild.
Because that just has to be right.
Yeah, right.
Yeah, right.
Because
exactly.
Someone else just took the other side of that
right.
trade.
Because if you were ever going to give that option, you'd be like, okay, I better make some premium here. For Monday, Tuesday, and Wednesday especially.
No doubt. Yeah. And those trades, so what does happen is this. Normally, folks, I like trading the NQs on this, okay? Now,
that's funny because I had pulled up the NASDAQ weeklies anticipating that's where you were going to go.
Well, you know what it was? Is that the NQs, folks, they almost had the volume, okay? The QQQ basically was only shot by a couple million shares. And when I looked, I says, okay, hold it then. Probability is that the S&Ps could be stronger, and maybe that's because of the oil market. Do you know what I mean? You stay right there. Tommy and I come right back, folks. We have the Dow right now down 23, Nasdaq's off 7.5, S&Ps are down 4.5. You get gold down 9.90. Gold's rejecting lower price once again, folks. We're gonna be right back.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Tommy O'Brien, Tom O'Brien. We do appreciate you growling and prowling with us out here. We have the Dow down 26 right now, Nasdaq off 6, S&P's off 5.5. And if you're watching Tiger TV, folks, what you're seeing out here is this. Now, check this out. This is pretty cool. Because on the Nadex platform, you can be the bid, you can be the offer. And as we were doing this, I suspect that this is a tiger out here because the bid and offer when I bought this, the bid happened to be like a 175 and the offer was 750. It was a large spread. Now someone is bidding 2 contracts at 650 and we're at 775. You know, and Tom, you see underneath there, the one with 200, that's probably the market maker, right?
Oh, yes, for sure. Right. And that's what I was going to say was, you know, it's definitely some type of retail trader, right? You know,
yes.
no matter what, that is coming in with a lower bid than the offer.
Right.
And they're trying to come in like 50 cents below it. Now, the other side is that, you know, if you wanted to take the other side of that trade, you could take it at that 650 right now, as opposed to the market maker really is giving you a trade that's almost untradeable at like, you know, 1 or 2, which you're going to pay almost in an exchange fee of 90 cents per contract. So it's just, yeah, it's interesting. I know you were talking about during the break, and of course, it's definitely a retail. Maybe it's somebody listening who's buying, saying, "I like that trade."
Yeah, no, there's no, and it's smart, folks. This is what. So this is what also happens as we walk through this. This one here will be a hard. That bid probably won't get executed, folks, because what does happen is this. Is that us as retail traders, we are only on one side of the marketplace, where a market maker can be on both sides of the marketplace. So that is harder to do in a contract that is not liquid, meaning that there's not going to be a lot of action in this one because it's so far out of the money. Where this does work, though, on a continual basis, and I do it when I'm trading the NDX, is those contracts there, when you're in the spreads, are very quick, Tom. Do you know what I mean? So
yes.
you can do that a lot, and they just take you out, which is beautiful. Do you know what I mean?
Yeah,
so,
and there's a very tight market in the spreads.
Yes.
On the same way. So
right.
they're very tradable on both sides, and the market's only, you know, 0.1, 0.2 sometimes in the NQs. So I would agree.
And you get extra money, which is nice. It's only small, but it's good, folks. And it's also good understanding how that works. So,
Yes.
Because of this volatility, you can get it on both sides. Meaning if you think that, you're waiting for a pullback, you lay that bid underneath that saying, okay, I'll sit there, maybe I get a few contracts, and then you're pushing it out on the other side, So we'll watch that thing. You know what I love about this, Tom? I love about this that I got to trade on all week, man. That's unheard of, man.
Yeah, that's right. No, they're a week. It's a weekly option play,
Right?
And it's a low risk, high reward trade, but it's a low probability trade. But guess what? You only have to be better than 1 out of 14 and you can be profitable there. So Yeah.
And
it's $60 like you put it for 10 contracts, or 120
seriously,
or for a potential $2,000.
Which is real money.
That is real money. That's right.
That's just so weird about that. Like,
real
I
money.
know it's all real money, but $60 doesn't seem real, where $1,000 does.
And what I've shown you many times on the Nadex platform is that these weekly binary prices are determined by where the market is when they open, which
right.
I'm not sure. Is it last night at like 11 o'clock? Maybe it's whenever it is, the beginning of the week, and we can find out. But many times during the week, every binary available will be hit by the end of the week recently. On one side of the market. So on the other side of the market, everyone's essentially losing. But
that's
still,
pretty cool, though. Yeah.
Right. Still, it's remarkable that many times recently, one way or the other, it's just had such a week that it's cleared house on every level
Yeah. And that's a lot of levels, folks.
Right. That's what, I would look at it and I'd be like, man, no matter what price point you chose, if you were just bullish the market this week, you were profitable. You made a successful trade.
Pretty amazing. It really is. Yeah. Let's go over and take a look at, see how this is. 1 second. Okay, so if we take a look at this S&P as we're doing this, the E-mini, we'll put this on a 10-minute right now. See what kind of action. Yeah, see, we're already getting action. This is interesting, man. The E-mini, folks. I know. I believe, it's on at 10 minutes. The E-mini, we just went from...
that would make sense, too, just not to cut you off, but the offer now on that contract is $775.
Okay.
And you got in at, I think, an average price of like
$663. So
that's a big difference.
I think I got 10 at $650 and 10 at $675. Yeah.
Yeah.
Right.
So you can see how quickly, even, with a week to spare, that's a big move when you're talking about from 650 to 750. That's 15% move in the price.
Here, if we look at, so check this out. This is what I was looking at. This is what's so wild, folks. Okay, let me pull this back up again. If I pull up the next contract, if you want to see something. So the next contract would be, my contract is a close over 2,056.50. The one below it is 2,044.50. Now that's $9 by 14. Okay, $9 bid, 14 offered. Well,
yes.
What happens is that, that correlation is 12 points away. So it's like, okay, man, if I get maybe 12 or 13 points, and if I get it today, guess what? I could get more than likely all my money back.
Yes.
On 10 of the contracts, and now I get a free trade the rest of the week and see where it shakes out.
Sure.
Which, if I got it today, I would take it. Even though it's $60, I'd still take it, because it's like it's free. Then there's whatever percentage move it is, I made money, right? I mean,
sure.
How do you when it's free? How do you even do a percentage move? Right?
It's over the long run. I mean, that's where
right.
it's.
Then it is exactly. No doubt. I know. It's pretty funny though. It's wild. So if we do take a look at this on a 10-minute basis, folks, what you're going to see is that your first leg down. Let me just get this. Yeah, your first leg down. This is making its way back now to the 2008, and right now we're 2006.25, and you got 7 minutes into the bar, and this is pretty good volume, So it's going to need more volume. It's going to need like, let's see, 41,000 contracts, and we are at 24,000. But it has price-wise.
And just to put it, that you were just looking at those two different levels, right? The 2056 and the 2044.
Yes.
And so, at a price of 7, it's about like $1 risk for every 13 in profits. You got to be successful 1 out of 14 times to break even. But then, if you go up to the next level, 12 points at 14, then it's like $1 risk for $6. $1 risk for like $6 and change a little bit in profits. You got to be right 1 out of 7 times.
Big difference. I know.
It's a big difference, right? I know. I would when I would make these weekly trades, I would make a trade really similar to what you just made, where you definitely want to choose one that has an active market. You don't want to go to those upper two where there's not even a bid. I wouldn't make that play. There's no reason to really. Yeah.
You stay right there, folks. Tommy and I come right back. Dow right now is down 18. Nasdaq's off 2. S&Ps are down 4.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We have the Dow right now down 16. Nasdaq is off 1. S&Ps are down 4. And if we go over, folks, and we take a look at, Tom, this is funny because at the break, I went over to the binaries of the NQs, right? And, the NQs, all of a sudden I looked at them and, we were down when we started the program in the NQs, folks, and now they're up $10, $10.25.
Yeah, quite a move.
Quite a move, and you can see that the actual the binaries themselves. Now, I didn't know what these were prior to when we were putting the other one on. Do you know what I'm saying?
Yeah.
But you can see they're very expensive now, every one of them.
Yes. Right.
You know, the largest one they have, meaning close of a 4420, a 4412,
right,
is $27.
Yeah, and just to put, that's only less than 60 points away from the current market, which is only 1.5% away from, where the current market is.
Which in the NQs can do in a day.
Yeah, and I'm just looking at even so the S&Ps, you're still looking at the one that you got into is like 2.5% as opposed to 1.5%.
Yep.
Away from where the market is. So they're just different price levels.
Big time.
Yeah.
Let's go to Carlos in California. Hey, Carlos, what's going on, brother?
Good morning, Tom. Good morning, Tommy. How are you guys?
We're doing great. How you doing?
Very well, thank you.
Cool.
Thank you. And the reason I called today is first to thank you for allowing me to for the information and the I don't want to use the word advice, but your opinion about the other day that I was short. I flipped my position, and I thank you for that. Now, last night I download again my the demo Nadex account.
Okay.
And I have some questions about it, really briefly. And the most important one for me is I see the bid and the offer.
Yes.
The spread so large. Why is that? I mean, very different. So, like, I'm seeing the FTSE 100 right now in the March, I don't know how to call it, the March contract. And it says 73.75, and the offer 79. Why is so large?
Well, can we do this? Can we go into, I've never traded the FTSE, okay?
Something else, just to get a taste of it.
Now, are you into the binaries or the spreads?
Actually, I have the platform, and I'm trying to. I actually downloaded yesterday at 2 a.m. at night, and I've been playing with it. But honestly, Tom, since it's different than the Thinkorswim, I want to disconnect from the Thinkorswim and just focus on this one. I'm just
okay. So
fresh.
This is what the reason I'm asking is this: is that the spreads are always bigger in the binaries versus the spreads. So when you look at the top of your platform, you're going to see indices binaries, indices spreads.
Yes.
If you hit the spreads, you're going to see that the spreads do not trade on such a large bid and offer. If we bring right now, I'll bring up the NQs.
And I think just the way to explain it is so. Carlos, there's binaries available and there's spreads available for the indices, for Forex, for commodities. There's each one available. So I'm not sure which one you're looking at, but if there's a wide spread, it's probably the binary market.
Okay.
And that's because there's so many different binary price levels that there's not enough liquidity yet to have a ton of volume at all those different levels to bring the bid and offer, tighter. So that there's going to be wider spreads between the bid and the offer on the binaries, whereas if you go into the actual spread contracts for the indices or the Forex, what's happening is there's a 3 to 4 available at a different time level. There's just more volume and there's much tighter spreads between the bid and the offer on the spread contracts. So that would be a way, if you want to trade them more actively, maybe to go in there and trade the spreads on Nadex versus the binaries.
Okay.
So let's walk you through it right now. Like I just brought one up, right? So if you go into the indices spreads, and then if you hit U.S. Tech 100,
yes,
and then hit the daily 4:15 p.m., and then as you go down, you're going to see these are all different size contracts. Now, if you hit the 43.50 to 43.80, which is the last one there, that's the master contract, that's called. That's an 80-point spread. If you hit that, what you're going to see is that the bid is 43.55.3, the offer is 43.55.8, and you'll see the indicative index at the top, and the index is trading at 43.59. So if you think it,
smaller.
okay, you see how, I mean, that's tight. The NDX is really tight on the spreads, and it's really important because when I was buying those binaries earlier,
Yes.
the bid then was only $1.25 and the offer was $6.50.
Yeah.
Now, another listener, you know, probably went in and put the $6.50, but you can see that the difference is pretty dramatic. That happens most of the time, Tom, right on the binaries too, right? They're just bigger, right?
Yes, the spreads are going to be bigger.
Yeah,
for sure.
because there's more risk even for the person on the other side. So they, you know, they're going to make that up too.
It's a different type of a trade for sure. You know, I mean, that's where the spreads. If you're just trading it for you're you know, and you can trade the binaries too, but it's a different market. It's a different trade for sure.
Yes. There's something else I want to say. They're doing something a lot better than before. I mentioned the Nadex people, because before they only give us 2 weeks. So I downloaded the platform in the past, and by the time I was trying to get a taste of it, it was expired. Now, I was on the phone because when I tried to download it again, I said that I had an account. So I called them, and he was a very nice person, very patient. He explained me that now I can use the platform longer, a lot longer, no expiration, he said.
Yeah, that's awesome. Right.
And he gave me a new password and everything, and I think they're doing such a good work. I like it. I'm gonna try to get a.
Yeah, you'll get used to it. Well, you just watch us trade them for a while. You know what I mean?
And what you did today, showing on the screen what you were doing, it actually gave me a better idea than just hearing what you're doing. And I really like that. Thank you very much.
You're welcome, man. We appreciate you growling and prowling with us out here.
And, you know, thanks again, Tom. Have a nice day. Have a nice day, Tommy. And you're my number one, Tom.
You have a great one, man.
Care,
have a safe one.
Thanks, man.
Thanks so much. You know, and as we're talking, Tom, it's pretty wild. You know, this market, folks, is clawing back. You got the Dow up 3 right now, the Nasdaq up 3, S&Ps are down $1.50. You got, let's see, gold's down $12. The bonds are signaling once again, folks, this market wants to go higher. The 10-year right now is up 3 ticks. It was up about 7 ticks earlier. Has light volume. It just can't handle price, which is still, like, insane. I mean, it's blowing my mind, actually, that I'm even short bonds when I know that the world's in a negative rate. But for some reason, they want to go lower, man.
Yeah, I hear you.
You stay right there, folks. Tommy and I are coming right back. We're going to be right back, folks.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Darrell Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. We have the Dow right now down 3. NASDAQ is flat. S&Ps are down 2.5. And don't forget, folks, no matter where you're listening in your car, you can get us 24 hours a day. We do live content every Monday, Wednesday, Friday, 8 o'clock in the morning to 5 in the afternoon. On Tuesday, Thursday, 7 o'clock to 6 o'clock in the afternoon. You can get all of that right on your cell phone. You just go to TFNN.com, hit Tiger TV. As you hit Tiger TV, you're going to get the full audio, you're going to get the full video, and we really do appreciate you growling and prowling with us out here. Mr. Basil Chapman is going to be coming up next, and of course then we have swim lessons from TD Ameritrade out of Chicago headquarters. Steve Rhodes, Dave White. Myself, we'll be back this afternoon, of course, and the volatility, is here, and this market's crawling all the way back, man. It's going to be wild watching this thing shake out.
From, gold to oil to the markets, right?
Well,
to the Fed
it's,
on,
if we had a little more time, let's go over the gold for a second, because which is really cool, folks. The gold market and the oil market trading inside the Nadex product is unbelievable, because what you get is, GCJ, is you are taking that defined risk aspect, and like right now with gold's down $15, and here, well, let's bring it up. It's down $15.80, and what it's doing, it's coming back into its lows from Friday, and it's coming back in, with dramatically lighter volume. Let me pull this up for a second. This is so cool, man, because it is. Okay, so now, with gold, folks, I trade the spreads on gold. So, you go to the commodity spreads, then you're going to go to gold, then I mostly, first I'll look at the daily and see what's up with the daily. So we're 1243, and what I'm looking for a bottom of a box that's pretty close. Now, the 1225 isn't bad. So look at that. That's right on the money. So a 1244, one contract is only $191, and you can make 309. Now, that sounds like a lot, but it's not a lot in the context of what happens in the gold market. So 10, here, let me give you the exact correlation. So 10 contracts is it. You're putting up 1,900, and you can make 3,000. 10 contracts, 10 Nadex contracts is one full gold contract. Well, one full gold contract, you have to put up $5,000. It's $100 a point. Where the difference lies is that gold can go down $50 in a heartbeat. Another 50 too. That's just how it likes to trade. Okay. Now, in this case, let me just see something here. So we have 7 minutes. See, I like this trade, man. The low.
Yeah, I like that trade too. And just going from, so it's 1225 to 1275, right? So yeah. 1250 is the middle of the box. You're at 1243.
Right.
So that's nice if you're looking for a volatile market, because you're going to be getting a nice risk reward where basically, let's call it, it's risking 200 essentially to make 300,
right?
Because it's so close. And for that, you're going to be paying like about $1, it looks like, in premium over where the market's currently at. Not even. The current market's at 1244.8, and you're getting in at 1245.2. So like 40 cents premium is all you're paying to have that risking 2 to make 3, as opposed to risking 2.5 to make 2.5.
Right.
Which I really love those, because once you start getting out of whack, you start paying a lot of premium where, it can just expire at the current market and you end up losing a substantial amount. Whereas that's a nice risk reward for a small amount of premium.
It certainly is. And I just bought one, folks. So, we'll see where this shakes out. Tom, thanks so much, pal.
Thanks, man. I'll see you in a bit. Okay.
Folks, you stay right there. Our man, Mr. Basil Chapman's going to be coming up next, growling and prowling with you. And hang on for the volatility, folks, because it's going to be a dynamite ride. Basil's coming right up, folks. Dow down 19, Nasdaq down 3, S&P's up 450. We're going to be right back. Basil's going to be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.